Hey, what's going on, guys? Welcome back to the channel, and in today's video we got a great one for you. What I want to do is address some questions that were asked me on Instagram over this past weekend. A lot of times I get these new investors reaching out to me saying, hey man, I love the content, but listen, I'm really worried about putting my money into the stock market. I don't really know what it entails. It's kind of similar to gambling in my eyes. Like what can you say that's going to ease some of these pains? So in this video, that's my exact goal. It's to sort of ease those emotions, those worried emotions that you may have when you're starting to invest. Maybe you're investing already and you're not getting the types of returns that you want to see. Well, this is definitely going to be a great video for you. And without further ado, let's just jump right in. All right, listen, if you guys are brand new to this channel, just coming here for the first time, well, I want to say welcome. My name is Dalton. This is D-Lits TV, and on this channel, we talk about all things investing. And like I said at the beginning, this is going to be a really solid video because I think that I get these questions all the time. And if I'm able to put it all into one video, wrap it up nicely, and when people ask me these questions, I can direct them back here. Hopefully, they're going to get the answers that they're looking for, and it's just going to help save time in the future. So it's going to be a really, really solid one. And the first thing that I want to mention right off the bat, not to confuse anyone, I am by no means a financial advisor. So anything that I do say, you want to take with a grain of salt. You want to make sure you're doing your own due diligence. Just because I love talking openly about my finances, investing, my journey in building wealth, it doesn't mean that I'm 100% right all the time. You need to copy exactly what I'm doing, buy the exact same stocks. No. There's certain things you want to be able to make your own decisions on in life, and money is the most important one. So now that that's out of the way, I think that there's a lot that we can address in this video, and let's just get it started. So one of the main things that people will bring up when they're just getting started and they're like worried about putting their money in, they're saying, hey, this is similar to gambling. I've been taught like this is how it is. I'm putting my money in the market. It's really risky, and I'm really worried about this. My parents haven't really taught me too much about it, and our education system, I don't know if it did anything for you guys, but for me, it was like I literally did not learn about stocks in school, which was just awful. But speaking to that point, it can be as risky or as least risky as you set it up to be. Investing can either be one of the hardest things you're ever going to do or one of the simplest things you're going to do. And obviously I go for the simple route, right? And it all comes down to mindset. So when you're looking at investing, you need to realize, hey, Rome wasn't built in a day. The perfect portfolio isn't going to be built in a day. If you have $1,000, you're putting it in the stock market, you're like, yeah, let's go. I'm going to make $10,000, and that's going to happen by the end of this week. It's just almost entirely unrealistic. When you look at investing is very different than trading in my eyes. Investing is when you are putting your money into the market and you are leaving it there. You are investing it. You're letting it grow over time. When you are trading, that's when you're making these, day trades, these penny plays, these different styles of investing. And I don't stick with this style. I go for the long-term investing method. And what you're going to find is that it is significantly easier because you can invest in what's known as funds. And if you have no idea what a fund is, there's several different kinds. There's ETFs, or exchange traded funds. There's index funds, there's mutual funds, and they all have a little bit of different nuances, but they offer some pretty solid diversification and help in structuring portfolios. So if you look at me and you're brand new to investing, you're like, man, where should I put my money? Where do I invest? Again, I can't tell you specifically, but what I did as a beginning investor and what I think is a very, very solid option is looking at those ETFs that are going to trace the overall stock market. And the one that I pick in particular is VTI, which is Vanguard's Total Stock Market Index, which is their golden standard for tracing the stock market. And when you invest in VTI, what you can expect, and notice how I say expect because nothing is guaranteed on the stock market, is anywhere from an 8 to 12% return annually, averaged out over the stock market. So I say averaged out because some years, like if you go look back in 2008 with the housing crisis and everything going on in the economy and the collapse, obviously it did not make any money that year and it actually went down in value. But had you invested in 2008 up until this point today, you would make so much money and the average return would be a lot higher. So when you're looking at this VTI, right, you're expecting that 8 to 10% return. That is what I now use as my benchmark for all my other investments. So people are like, hey, what should I do for individual stocks? I'm trying to figure out which ones I should invest in. Where do I begin? Well, I always begin at looking at ETFs, and I look at the ones that are doing well and I see what their return is. And I think to myself, okay, Now that I'm creating this portfolio, I want to figure out, can I actually beat the market? Can I beat an ETF that is structured like VTI and have my portfolio do better than that? And if my answer is no and I don't feel confident in it, it's like, okay, I'm just going to invest in the ETF because that's where I'm not guaranteed an 8 to 12% return, but historically you can expect to get somewhere between that range. Now, another thing that I like to promote on this channel is healthy investing, right? And if you have any sort of debt, I try to tackle that before you're ready to invest any of your money into the stock market. Now, another thing to just keep in mind, to be aware of, is that if you need your money for any sort of reason, and you're worried about putting your money into the stock market and you think that, you know what, you might put it in and you may need to take it out a year from now, well, I would say that you need to start being a little bit more realistic about what your intentions are with investing. So if you are going to have this quick turnaround and you're just trying to make a quick buck, you know, like maybe go to the casino and put it on red and spin the roulette wheel, hope it lands on red, and right there you could like theoretically double your money. And obviously I'm not telling you guys to go and do that, but I'm saying that based on my experience, those riskier trades that I've made in my past, I would have had a better chance just going to play roulette. So hopefully your mindset is kind of shifting here. You're like, all right, maybe investing money is a really solid route for me, where if I can get close to an 8 to 12% return, rather than keeping it in the bank where I'm getting 0.02% interest, that's where I want to keep my money. Well, I want to just say, make sure that you do have an emergency fund, because any of the money that I put into the stock market, I just kind of pretend, you know what, I never had that money, right? I leave it there. I don't think about it. I'll go in, I'll look at it. I love watching it grow. I love watching what happens to the portfolio in itself, but I have no plans to sell any of it at any point in the near future, right? And I do have an emergency fund established. I've made sure that I'm ready to put my money into the stock market. And I think that that's a very important thing to do when you're just beginning. You want to make sure that financially you're ready to make this leap. And a lot of people are saying, all right, I want to start investing. How much money do I need to start investing? How much do I need to throw into the market? And with technology today and a lot of the different brokerages now offering fractional shares, you can invest with as little as like $1, I believe. But some people have been like, hey, I've got $5. Would you wait till I can buy a full share of something? And to be honest, no, I would put that money in. Whenever I have extra money, it goes to the stock market, right? Whenever I look at when I start investing, every little dollar counts. Every little dollar is going to help grow your portfolio. Remember, time in the market is always better than timing the market. And what I've found, that as people start to invest, maybe you were a little bit skeptical of it at the beginning, you start investing just a little bit of money, it's addicting, right? You love to put your money in there and it grows and you get this adrenaline, it's pumping, you're like so happy, and it energizes you to continue putting more and more money into the stock market in the future. And so I think that if you're questioning, you know what, I got $10, do I throw it in the market or would you wait till you can buy a share? Man, just get started. It is so worth it. And you're going to catch a bug, I promise you, because most people that reach out to me, they all say the same thing. Once they get started, they love it and they really get addicted to it. And it just helps grow your portfolio so much more. So I think that if we take a step back, we look at this situation, if you look at the stock market, if you are just getting started investing, it isn't terribly hard to get around an 8 to 10% return. Okay. Now that you know that, now that you kind of have that down, and again, nothing's guaranteed, but this is what history shows. That's pretty solid. You can expect that. You also know you don't really need a ton of money to start investing. You just want to make sure that you're in the right financial place to begin, right? And it makes a lot of sense, because if you're going to need your money, you don't want to have to sell, pay these different taxes, which I also mentioned. You don't want to have to pay taxes, lose even more money, and get stressed about your investment. If you can invest for the long term, you're going to sleep well. It's going to help your emotional status. You're going to be good to go. But if you want to take it a step further, you want to get a little bit riskier, there's other methods you can certainly consider. But this video, again, is made more for those people who are worried about putting their money into the market in general and don't really know where to begin. Now, if you guys would do me a huge favor, if you made it this far into the video, if you just hit that like button, it would mean a lot to me. What it does is it promotes my channel onto other homepages and just kind of gets the word out. And honestly, everybody who's reached out to me, there's been a lot of people who said that they weren't even thinking about investing until they saw a channel like this, where kind of it breaks it down to a more beginner standpoint. And that, I just take so much pride in that, because it means a lot that honestly the impact that this is having to change some financial statuses in the future, I know it's going to be huge, and I just can't thank you guys enough for the support. So anyways, If you guys did enjoy what you saw, consider subscribing to the channel. Click that like button. It would mean a lot to me. And have a great day. To the people who say investing is boring, the stock market isn't that interesting, I just want to know what you do in your free time, because you must be some really boring people.